Hey, everybody. Super happy to be here. Thanks so much, Dave, for having me here. Hi, my name is Rob Booker. Some of you know me, some of you don't. Excited to be here. And I'm going to try to pack this presentation with as much information as I can. I was a commodities trading advisor from 2007 to 2011. I started trading in 2001. I was the worst trader in the world. We'll talk about that in a minute. I primarily trade FX, but I do look at stocks as well. We'll look at a bunch of stocks today, actually, to throw those into the mix. I primarily do robotic trading, and you could see my robot running right here live 24 hours a day. This is my smaller account. I have a larger account as well that runs the robot. But we'll talk more about what's going on in developments on the robot in just a moment. And I like pancakes a lot. Okay, I'm going to move back and forth around and through my presentation a bunch, but I do want to show you full screen on the presentation if that makes it easier for you all to see, which I think it would. Uh, Remember Billy Crystal in When Harry Met Sally used to read the last page of a book? I do that too. And I figure maybe you want to know where we're going with this presentation at the end. And here's where we're going. I want you to text me anytime you feel like texting me. So that's actually the number. I have two numbers, and my kids have both, and traders have both. So you can actually text me at that number right now during the presentation and see if I'm really here and ask me a question as we go. You can also get more information at robbooker.com. I could care less if you ever buy anything from me. It's meaningless. It doesn't matter. It wouldn't change my mind about how awesome you are if you do or don't buy anything from me. So that's not what I'm here for. I do love talking about this stuff, and we'll talk more about whether I love trading or not in a minute. But first, a warning, Dave mentioned it. Trading involves a substantial risk of loss and is not suitable for all people, humans, pets, whatever. You know that already. I'm a terrible discretionary trader. Actually, lately I've been pretty great. So, I mean, but I'm generally terrible at picking direction. I like to trade mean reversion strategies because I feel like, as Fisher Black said, the most central concept in finance, at least for me, is the fact that everything eventually returns to its natural state. The current stock market that's out of control, no matter what Jim Cramer says or anybody else, eventually it will fall. And any stock market that's in the depths of despair will eventually rise. And then every day there's an ebb and a flow, and things don't ever just go in one direction forever. So I don't really like picking direction. If that's your thing, hey, congratulations, you're amazing. And I love you. I'm not really great at picking direction. I mean, sometimes I think I am, and then I do a terrible job. Right now, actually, and I did a YouTube video today about this. I have some really great discretionary trades that pick direction going on, and I'll show you how I took those trades. And maybe that'll work for those of you that like to trade options or anything else and pick direction and whatever else. But generally, I like to just trade back and forth, and I like to take a lot of trades, and I mean thousands of trades per month. But that doesn't really mean I like trading. I mean, I don't really like trading. I think trading is just like a means to an end. I'm not obsessed with stocks. I don't watch business television. Um, the last thing on earth I care about doing is taking a tour of an exchange floor, like to see a floor. I don't think that doesn't really matter. I've seen lots of floors. I don't really love trading. I love traders and I love risk takers. I love reversion to the mean, but I don't really care about trading. I just want to make money. And I probably, if you've been trading, like as Dave said, longer than a day, you probably just want to make money too. That's all that matters. Anyway, I love traders. I love hearing from you. I'm going to put my number back up on the screen. So if you want to, you could text me during the presentation even. I think a few of you already did. Anyway, so welcome. Let's talk about my system. This is my primary system. This is a picture of a chart with a red line on it. We're going to look at like 100 of these today. That red line on the underside of the chart is what I call Knoxville divergence. And I think, oh, look at this. There it is. Ooh, that's a really cool little pointer. That Knoxville divergence is an early warning sign that price is going to reverse and go in the opposite direction. It's not a promise or a guarantee. Nothing is. Anybody that says they guarantee that something works all the time is a jerk and a liar. But I'm not that guy. I don't know exactly what's going to happen, but I know when something is maybe more likely than not to happen. So this is called Knoxville divergence. I built this indicator while sitting in a coffee shop in Knoxville, Tennessee, the Old City Java House coffee shop place. And here's how it's built. In this chart, price is falling, but the momentum indicator is rising. That means although price is dropping farther, the enthusiasm for price falling is dissipating. At the same time, the relative strength index is oversold, all the way oversold. And this is like a multiple things kind of alluding to the same early warning sign. Price is falling, but the momentum is not. And we went oversold, which is not ordinarily anything of great importance. And I don't listen, I'm not like, I don't go to church every Sunday and worship indicators. That's ridiculous, right? There's some people out there that are like, oh my gosh. So I know overbought and oversold are, it's contentious. It's like politics. You don't want to talk about it at dinner with your family. You know, do they lag? Lagging indicators versus leading indicators. That's the stupidest argument I've ever heard in my life. I have no interest in that whatsoever. But this combination of things, when price is falling, momentum is not falling, and the relative strength index is oversold, that's bullish divergence. And it's more likely than not that there will be a little bit of a boost in price. Here are some examples of the euro Australian dollar. Knoxville divergence. This line appears on top of the candles or the bars because price was rising, but momentum was not. And the relative strength index was overbought. All that stuff together gave me a red line on top of the candles and gave me an early warning sign that price may reverse and head back lower. And that it did. And then at the bottom, after it dropped, price was falling, but momentum was not. And the relative strength index was oversold. And so there was an indication that price had exhausted its move lower and then was headed up a little bit. It's the ebb and flow. It's the tide. Nothing ever goes up or down forever, unless it's a company going bankrupt, you know, pets.com. I'm still long pets.com. You think it's coming back? No, it's not. And I call this Knoxville divergence when run robotically. Robotomatically. That's a great word. I just made that up. Robotomatically. When I run this robotomatically, I call it the Finch. Now I'm going to show you my live account in a couple different places today. That's one right there. And that's the Finch running on a $10,000 account with a new method of running the Finch in a $10,000 account. Tends to do between 1, 2, and or 3% per month. Nobody ever, you know, bragged at a trading conference that they were making 2% a month, but there are like a million hedge fund managers that would cut off their left leg to make 2% a month consistently. And that's my only goal. That's all I care about, is managing my money, my family's money, and experimenting with little trading accounts and doing 1 to 3% per month. And then I'll talk more about my higher risk trading a little bit later, but that's called the Finch. It's a robot I run in a $10,000 account, in a $50,000 account, in a $165,000 account. And my goal is to make between 1 and 3% a month doing the following things. Success for me is finding something that works, dealing with its flaws, and refining it over time. As a matter of fact, that's what my wife did with me when we got married last year. I have flaws, and she's going to refine me over time, and that's great. I'd rather try to exploit the tendency of traders to overvalue or undervalue something at exactly the wrong time than I would try to pick a direction and figure out what's going to happen before it does happen. I'm not very good at that. I'm not good at telling the future, but I'm good at identifying that something looks like something that happened in the past. In other words, I can recognize patterns, but I can't tell you your horoscope. Here's Knoxville divergence on Groupon, maybe the worst company still in existence today, besides General Electric. Just kidding. Remember Jack Welch? He had that thing just dialed in, and then everything just fell apart when he left. It makes you wonder. Anyway, this is Groupon. Groupon's a piece of garbage. So it's not like I'm encouraging you to go out and buy a garbage stock, right? Like you got to do maybe a little bit of fundamental analysis. Or do you? Or do you have to do a little bit of fundamental analysis? Maybe you don't. Maybe you could just buy Groupon a little bit at a time when it prints these divergences. Maybe you could focus especially on those divergences after earnings. And maybe if you scaled into a trade over time, you'd be able to get in, get a reasonably good price, and you'd be able to, oh, there goes my, I don't know what that is. Let's see, turn that off. Maybe you'd be able to get a good price, and you'd be dialed in too. All right, that's just Groupon. All right, I got caught off guard when that audio message started to play. I apologize for that. Here we go. This is Twitter. This was the worst stock in the world for a while, and everybody thought Twitter was going to go bankrupt. And then @Jack took over again, and bullish divergence printed near the bottom, and then Twitter just went on a absolutely amazing run. But in the middle of that run, even on the daily chart, Twitter would print bullish divergence go up, print bearish divergence and fall, and that pattern would repeat itself over and over and over again. Here's Groupon again, prints bullish divergence, it jumps up, prints bearish divergence, it goes down. It's an ebb and a flow. I just want to say again, when you see a divergence like this after earnings, it is incredibly effective. And I know some of you are like wondering, how the heck do you get this divergence indicator? Well, there's a link on my homepage and you can download it for free and for most trading platforms. Okay, so we get that out of the way. Bullish divergence here on International Business Machines. I think they make typewriters, I think. And it printed bullish divergence. And especially these bullish divergences that occur after earnings, right after earnings, are super effective. A lot of fun. Here's Tesla, the world's most maligned company and CEO right now. I don't know why everybody hates this guy so much. All he's doing is trying to like save the planet, and he's kind of a nerd. I like that guy. Anyway, it prints bearish divergence. It goes down. Prints bearish divergence after earnings. It goes down. I mean, it takes a while to do it. It's not like, listen, if you're into immediate gratification, I'm not your guy. But, you know, bullish divergence on the British pound US dollar. Boom. Boom shakalaka. Shish boom bam. Bearish divergence on the Euro Swiss franc. How do you do, ma'am? Look at that. So what if, I asked myself this some years ago, what if I took my focus off of directional bias and trying to pick a direction, and I just did more of bullish bearish divergence, and I just let something run automatically because these bullish and bearish divergences were pretty good at helping to time a reversion to the mean? What if I just did that? Could I build a system that automates that process? Well, I most certainly did. So I built a robot called the Finch, which we discussed earlier. And what this robot does is it looks at charts like this, and then it looks for divergences that help us take a small slice out of the market when it goes up and when it goes down. All these charts here look like they're just going in one direction. I mean, Adobe, look at that. But inside of each of these charts, and I'm not even showing them here, but inside of each of these charts, there were small divergences as price moved. So price would go up, it would come down a bit. Price would go up, it would come down a bit. Price would go up, it would come down a bit. Price would go up, it would come down a bit. And even for these ultra trending financial instruments, you'd get divergences. You get some kinds of reversals. So here's why the robot works. It's consistent. It doesn't let a small loss get out of control. It does the same thing over and over again. Find something that works, accept its faults, and then dedicate your life to making it better. And that's what this is all about. Look at a couple more charts, and then we'll jump over to some live charts, and I'll show you some trades that I took recently, and there we go. Bearish divergence on the left-hand side of the chart on the Euro-Japanese yen led to a substantial decline, but I don't need a substantial decline. I just need it to move a bit. This is the British pound US dollar. Bearish divergence on the left, and then a move lower. This is the British pound US dollar again. It's a pretty great currency pair for a lot of this stuff. Bullish divergence on the left, and then a nice move upward. Bearish divergence in the middle, and then it drops down. And then bullish divergence again, and it rises up. And this is so on and so forth. I mean, it just keeps happening over and over. All right, before I start looking at some live charts, that's how to get in touch with me. I love hearing from you. You can go to my website. You can text me. Don't call me. If you call me, I'm not going to answer the phone. I hate the telephone. I'm not going to answer the telephone. It's a terrible idea. I would love to go back in time and hang up the phone on Alexander Graham Bell. Let's look at a couple of trades. Swiss yen. This is a recent win. All right. I shorted the Swiss franc Japanese yen recently. And here's how I did it. Here's what I want to look at together. I want to look at this together. All right. The Swiss yen is like one of these financial instruments that will have small retracements every once in a while on a bearish divergence. Bearish divergence, bearish divergence, and then a small decline, small decline. And if I see 1, 2, 3 times later, if I see 3 of those divergences on a chart, I might draw a trend line and then trade a break of that trend line lower. Lower, not higher. So you could look at a 1-hour chart, a 60-minute chart, or as we're going to do now, a 4-hour chart, and you can see exactly what I'm talking about. 1, 2, 3. You can look at a 60-minute chart. 1, 2, 3, 4, and then we got a pretty substantial drop. I plan most of my discretionary trades from the 4-hour chart. And a lot of times I'll wait for that third divergence, set up a trade, and short some right at the divergence and a little bit more when we break through a trend line. And what I want to do is I want to hold on to that trade toward a pivot point. Most of you know what a pivot point is. A pivot point is it's a great level for trading a reversion to the mean. A pivot point is simply yesterday's or last week's or last month's or last year's high plus low plus close added together and then divided by 3. Most of you already knew that, so I'm not going to sit here and waste your time teaching you something that you can Google. But when the Swiss yen dropped, it wanted to go back to, I don't know why my charts have been doing this lately. It wanted to go back to this weekly pivot that had previously been missed. It wanted to go toward this purple monthly pivot. Still wants to get down there. Get down. Get down. Funk it down. It wants to get all the way down to this weekly pivot, this green one, after it printed this bearish divergence. So I'm short. I'm in that trade right now. I don't know any good way to send myself a screenshot of that, but I did a YouTube video today and I talked a little bit about it. Here's another one I'm setting up. We're going to look at the currency market and then we're going to look at the stock market. This is the British pound Canadian dollar. 1, 2. You can barely see there are 2 divergence lines. It might not be visible to everyone. 3 divergence lines. And what I want to do now is I want to start building a buy position up toward this weekly and monthly pivot that are right on top of each other. Remember how I said divergences after earnings are really great? Divergences at the beginning of the month are really great. I don't know why that is, but end of the month, beginning of the month, they're just fantastic. They're just glorious. They are lovely. All right, why don't we look at some stocks and some divergences? see, I get a watch list. I don't know. I don't even remember what stocks these are. I had this list of stocks that were really low priced stocks. I don't know what HDSN does. Probably makes commodes or something like that. But it's printing a whole bunch of divergences and massively oversold. And we've got a weekly pivot higher and a weekly pivot higher. I'd buy a little bit of this. In fact, it's after hours, but I'd buy this right now. I'd buy it right now if the market was open. I'd probably buy it even when the market's closed. This is Turquoise Hill Resources. I'm guessing they make turquoise jewelry or something like that. We could even look at the 4-hour chart. Look at all those bullish divergences. I didn't plan this, but I'd buy the heck out of this. I don't know what this company does, but we've got wonderful missed pivot points higher than where we are right now. I have made a whole bunch of money from FNJN, but nothing's working on that one right now. Nothing's going there. EVC, don't know what EVC does. WIT, I'm at my wit's end. SWN, GTN. We can just look at old ones here. Check this out. So we print this bullish divergence. And like I said, maybe you ignore the first one. Then we get a second one. Then we get a third time's a lady. And maybe we just, scale in a bit, get our average price to something like $12.50. And then we wait for that beautiful bean footage. We wait for that beautiful move upward. Maybe we don't trade the first bearish divergence here. Maybe we wait for this to rise a little bit further, and then maybe we buy some puts. Oh, this is so beautiful. It's one of the most beautiful things I've ever seen. Bullish divergence after earnings right there. Bullish divergence number 2. Bullish divergence number 3. Boom. Boom, shakalaka. Barrick Gold Corporation. I really think gold's going to have I don't know. See, this is once again, every time I say anything that acts like I'm picking direction, just ignore me. Just don't listen to anything that I say at all, ever. Don't ever listen to me when I talk about picking direction. But now that I've said that, hey, I think gold's going to go up. I really do. Okay, I'll shut up about that now. Whoa. Okay. Oh yeah, this is an old trade that I have. So this is ultra, who knows what this is. This is an example of when this didn't work and when this just kicked my butt. So I saw this divergence over here, right in this area, and I didn't do anything. And then I saw this one, I didn't do anything. Then I saw this one, didn't do anything. And then I saw these ones, and I'm like, all right, I'm going to buy some of that. So I bought some of that. I bought it at $13.56. And I've been holding on to this stupid stock ever since then. And I could buy 4 billion more shares if I want to, because it's pretty cheap. But oh, it's raining outside, man. Whoa, storm coming in. If you look at a satellite map of Conroe, Texas, you'll see the storm over my office. All right, so I'm going to hold on to that one, but that's an example of when it doesn't work very well. You got to show the examples that don't work, right? Otherwise, it's just kind of lame. Here's one that I've been looking at for a while. Rev Group, 3 divergences, all after earnings. I love these stocks that are under 20 bucks. Then we bottomed out a bit over here, and we did pop up, but I still haven't bought this one. And I'm thinking pretty soon this thing's going to, bottom out and do a little bit of a reversion to the mean, maybe come back up to this pivot point up here. Let's look at some popular stocks. Tesla. Nothing really going on here. There's no divergences. So I'm not interested. Let's look at Twitter now. So we have 3 divergences stacked up right here. We would ignore that. Next divergence, we would ignore that. Last divergence, that's the 3rd. We would not ignore that. Not a surprise. Wow, that really dropped off the highs. I haven't paid attention to Twitter. Wow, that's pretty amazing. I'm not going to say anything about Amazon. This is a beast, right? It's probably a dumb idea to bet against Amazon, but remember, things come in sets of 3. So 1, 2, 3, drop. 1, 2, 3. We got a little bit of a drop. It's kind of difficult to justify betting against Amazon, right? I mean, that's just kind of stupid. How about Alphabet? Another stock I think you'd be kind of maybe a dummy to bet against. But once again, they go in 3s. 1 divergence, 2 divergence, 3 divergences, and a drop. And then we're setting everything up all over again. 1 divergence. Then we need a couple more sets of divergences before I would consider doing anything with this stock. What are some other popular ones out there? Bank of America was moving. Bank of America has been pretty good to me over the years. I'm just looking at, big movers. It's moved. Look at that today. Sometimes I like looking at ridiculous stocks. India Globalization Capital. That looks kind of dumb, doesn't it? That looks kind of silly. I don't know what this is. That looks insane. Oh my goodness, that's crazy. Yeah, so you could pull up your favorite stocks, whatever you like. Whatever you like. What's Home Depot? I can't remember the name for yeah, HD. That's what I thought. You could look at whatever your favorite stock is, and you look for 3 divergences and some reversion to the mean, and then you're good to go. This is how to contact me. This is where to go. You can get more information about me, my robots, a link to the indicator at robbooker.com. You can text me at 949-639-9169. I don't even know what my homepage looks like. Let's just make sure the indicator link is there. Yep, free indicator right there on the screen. Boom. Right there at the top. You just click on free indicator, and you can get it for TradeStation, eSignal, Thinkorswim, MetaTrader, Sierra Charts, and more.